Yo, 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 what's up, everybody? How y'all doing? Welcome to another Black Diamond FX training session. It's your boy, Devin Baptiste on the mic. And today we will be going over something very, 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 very powerful. All right. This is something that if I had learned about them, not really learned about, because I had been hearing about them, but I didn't really look into it, you know what I'm saying? But if this is something that if I had really looked into it and started um learning how to trade them earlier, man, my trading would be like far beyond where it's at right now, especially um what 3 years ago before the hurricane flooded my home. The year that I resigned. The year that I resigned. But yeah, because I mean man, that was the year my trading actually started taking off. I mean, when I say taking off, I'm talking like five-figure trading account. And it would have taken off even faster had I learned it. But I mean, I've learned it now. So guess what? Boom. My trading right now is like supercharged. So I had been hearing about, we all know about order blocks, all right? I was trading when I first started trading smart money, order blocks was I would always look for order blocks. And at first I really hadn't heard of breaker blocks and mitigation blocks, right? So my order blocks, everybody know order blocks they don't always hold. They're not always respected. Sometimes order blocks get traded through and they get violated. All right. And I say sometimes, but it happens pretty often that order blocks get violated. Right. But what happens when order blocks get violated? And see, back then, when my order blocks got violated, I was like, oh man, another mistrade. Just gotta wait for another one. However, since learning about breakers and mitigation blocks, oh my goodness. Let's go to the charts right quick. Right. So I have this drawing right here. I was showing my little homeboy um about not order blocks, about mitigation blocks and breakers. I'm gonna do a quick drawing for you guys and show you simply a mitigation block, well, an order block, not order, breaker and mitigation. All right. So first we're gonna start with a breaker. Okay, so pretty much a breaker is an order block that got disrespected. All right, or violated or ran through or whatever you want to call it. All right. So breaker block. Excuse my hand right now. I'm not the best writer in the world, but it's not all about that. All right. So check this out. Let me show y'all something. So everybody knows what the smart money reversal pattern looks like, right? We go up, came down, break structure, boom, and then boom on its way. All right. So normally we have our breaker structure right here. Boom, 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 boom. Okay. BOS. Then most times we would have an order block somewhere here. All right. Now in that order block, we would expect price to come down and then continue on its way up. However, once that order blocks get disrespected and comes down and gets ran through, this now becomes a breaker block. All right. Now, what happens with a breaker block is price will come down, it'll trade through it, then it'll come back up and trade in it. Okay. A lot of times it'll come maybe 50%. Sometimes it'll come below 50. Sometimes it'll come above 50. But most times it'll come back and trade in it. You might get a wick, you might get some candles, and then bloop, bloop, go on its way down. All right. That's pretty much a breaker block. A failed breaker block is a failed order block. See, this order block failed, became a breaker. Now, we also have on the other side of that what's called mitigation blocks. All right. And let me show you guys right quick a mitigation, what it'll look like on the drawing. Okay, so we got mitigation blocks. Boom, mitigation block. Okay, so with a mitigation block, it's going to look almost similar, but not quite. All right, so check this out. You're going to come up, going to come down, going to go up and break structure. All right, and you're going to come down, you're going to come down, but we're not going to really break structure too much. Now we might come down and hit an order block. It's possible we're going to come down and hit an order block. Okay. But then we're going to hit that order block and we're going to go back up. However, when we go up, we will not break this high. Okay. We will not break this high. And as this start coming down, you're going to notice, or even on this way up, you're going to notice a block here. All right. A block there. Okay. What's going to happen with a mitigation block is, since it did not break this high, we're going to start thinking that this is going to come down. This is essentially a shifted market structure. All right. If you're in my tutoring, my mentorship, you're going to see me write SMS from this high to this high, shifted market structure. Once you get that shifted market structure, right, this, our mitigation block right here, from that point on, it's going to operate like a breaker. It's going to come down, violate it, trade through it, come up, and then boom, take your entry right up in there. Okay, boom. And that's essentially a mitigation block, which is a failed breaker. All right. And I'm saying a failed breaker, but not necessarily a failed breaker. The only difference is we have this shifted market structure right here. All right. Notice we didn't have that. On the other side, we had this failed order block. For a breaker block, we got to have this failed order. I mean, for a breaker, we gotta have this failed order block. Then it comes up, okay, and then boom. All right. For a mitigation block, it's not going to break through the order block. It's going to respect the order block, but then it's going to go up and you're going to get that shifted market structure right there. All right. So now let's go take a look at the charts and see what it looks like. And as you can see, this is a trade that I found off of a breaker. All right. And let me show you guys, I'm up $800. This is live. This is futures. All right. So what happened was I saw we were coming down here. Okay. Then we made this low right here. And then we broke structure here. So once we broke structure, I drew out my zone here. I drew out this zone. So then I'm like, okay, what are we going to do? Are we going to come back and test an order block? Or are we going to respect this breaker? Well, what happened was wait, hold on a second. This was a breaker. I don't know. I think I drew it wrong. But anyway, yeah. This is a bullish breaker. I'm sorry. This is a bullish breaker. It's just on the opposite side. But so what happened was it came down, then once it broke structure right here, that's when I put my standard deviation Fibonacci tools on, right? And I look for liquidity in between the -2 and the -2.5 or at that -4 level. And as you can see at the -4, we have that external liquidity at the high right there. All right, so that became my target. Now, normally I look between the -2 and the -2.5, and as you can see, there was nothing there. All right, the market was balanced. There were no fair value gaps. There were no highs, no lows, no external. All right, but the external liquidity was right up there. So that's my target. Okay, but back to the breaker. This was the breaker right here. See, I came down. We broke structure here. Okay, broke structure, came down, broke this. Once it broke, the low, that previous high, that last up close candle that led to this low was here, this black one right here. but I just mark out the whole area. All right, the whole area. So then I expect price to come down, trade into it, which right here we got a wick. All right, now I didn't enter on the wick. I looked at the candles. You got to pay attention to your clues. All right. See what happened? He came down here. Boom. Came up. Once it came down, and I saw these little candles, these low volume candles, I knew it was getting weak. Then all of a sudden, it started going up. But I actually got in up here as it started going up. All right. I didn't get in down here. I got in up here. All right. Because you want to make sure. You want to make sure. Okay. But that was a breaker. Now, there are some, let me see if I can find an example of a mitigation block for you guys. Let's see. Gold. Look at this gold. I was in gold. I got out of it. I should have stayed in gold. And gold was another one on a, what was this? This was a mitigation. Because look what happened. With mitigation, it came up, down, okay, and then boom, came up here. All right. So it should have went down, down. No, this wasn't mitigation. This was a, I don't know, this was just a regular, I think this one might have been just a regular order block entry. I'm not sure. I'm not sure, but I was buying gold and I got out of it. Let's see. I want to find a clear cut mitigation block for you guys. All right. Let's see. This one broke. This would have been a, this one would have been close to a breaker. Came back down. Okay. Now, this one here, let's see. No, but this one broke through. So that would not have worked either. Let's see. Mitigation blocks. Sometimes they're hard to find. Sometimes they're real hard to find. But as you can see, we get a lot of what I did notice is that sometimes when we get like a regular order block entry, then we'll get to like a mitigation block. All right, because it'll come down some, and then we'll get another another block here, and it'll come not all the way up, then come down and up and test it. Watch, just like this. Let me show y'all. See, I've been looking at these so my eyes can see them clearly. You guys may have to spend some time in the charts. All right, and look what happened. It came up, and look, we even had fair value gap right between here and here. All right. Even had a fair value gap. So when you got a fair value gap, that makes it more likely to even come back. All right. Even though it didn't trade into the fair value gap, still. All right. And but look what happened. It came up, came down, came back up into the mitigation, and then boop, took the trade down. All right. But I want to see if I could find one like very that's extremely clear for you guys. Let me see. Like I said, it might be hard to find a good mitigation block. Let me see. I know they do have them on here. Let's see, was this one? No, this was not one. This is Euro futures. Euro futures. Okay. What was going on with Euro futures? See, we came down. Okay. And we broke this structure here. Um, we could have been going up. But then I started looking at it, and then I'm like, this never broke this high. All right. This never broke this low. To me, that says consolidation. All right. Now it's possible you can get some small scalps up in there, but the fact that these highs and lows are being respected tells me that this is most likely going to consolidate. Okay. And this one here, pretty much the same. Actually, this one made this low right here. All right. Then it came down and made this low. This is still on its way, perhaps coming up. So we'll see. But this may be consolidation as well. All right. I'm trying to find a good one for you guys. This consolidating 15 minute. we might be getting a lot of consolidation. Let's see. Ethereum consolidation. Gold pretty much consolidating. Copper. All right, copper's moving. Let's see. Was there right here, here? No. No, 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 no. No, no, no. What is hard? I can't really find one right now. But when I do, I will let you guys in on it. I'll make a post and post it on my YouTube and show it to you guys what a mitigation block, what it looks like, and um let me see, it might have it on the Forex chart. Just bear with me a few minutes. I'm gonna just do a quick run through. I want a clear one for you all. Let's see. Mm, mm, mm. We could be getting one here. Down, respect, never came back up. Past here. This look like it may come down. Look like it might come down. But we don't know for sure yet because it's still in development. All right. I'm tired, y'all. I ain't gonna lie, I'm tired. But I gotta bring you guys this sauce. All right. So I really don't see a mitigation block. Let's see. I thought this could have been, I thought this was gonna be one right here. Because look what happened. We came down. Okay, created this low. We came up and broke structure. Okay. We broke structure. So once we broke structure, this could have been a breaker where it come down, boom, you trade through, and then come down to it, and then go up. However, what happened was it came down and it broke through. Failed breaker. Failed breaker. That gives me mitigation vibes. All right, let's see if I go to the 5 minute. All right. So it came and broke through. That give me mitigation vibes. All right. But then look what happened. All right. In order for this, the mitigation block would have been here. All right. So it would have to go down, up. This would create it. So it would have to go up here, break through, and then boom. But look what happened. It respected. So this became an order block. Started coming down. And then, oh man, look like we may have a breaker right here. All right. Perhaps, perhaps. All right. Just have to see what goes on with this candle right here. All right. So it's possible. And look, if you look at it, the overall trend is bearish. So excuse me, it's possible that it is this would be the breaker. Okay. And we're gonna see what happens. See, we do have a small, very small imbalance right there, right around 50%. Let's see, is this 50%? Boom, boom. 50% imbalance. Is just below. And look, see what we getting? Look at that wick right there. See what I'm saying? Most likely, we could take this AUD NZD sell. All right, we only have 46 seconds left on that candle. All right. I mean, although it's a 5 minute candle still. Go to the 1 minute. All right. We'll keep an eye on it. I'll come back to that one a bit later. But the fact that we did break below this low right here, make me think that this will come down. All right. Now, I'm not taking this trade because I'm in futures right now, but I just wanted to see if I could show you guys if I could find a mitigation block. But just remember, what I said about those breakers in mitigation, you know, the mitigation blocks won't break that high or that low. All right. Then it's going to come down and trade through, come down or come up. It's going to trade through the breaker, and that breaker will become a failed breaker. And it's going to go back up or down, tap it, and then go in a direction. All right. I'm gonna um I'm gonna draw it on the whiteboard one more time for you guys. Let's see, where's my whiteboard? I'm drawing the whiteboard one more time just for you guys to take a screenshot of it and keep that with you. Get your eyes adjusted to seeing those. Let me make a new one. So we got breaker. So that's bullish and bearish breakers, right? Breaker blocks. Okay. So we got the bullish, the bullish breaker blocks. They are going to come from down, up, down, up, down, up. Okay. And you want to get your breaker structure. All right. Or liquidity grab, whatever you want to call it. Then you're going to get your chalk, change of character. All right. This, you're going to be expecting, you're going to have a order block here. And since it's coming down, you're going to be expecting price to come up and test this order block. But what's going to happen is it's going to break through it. It's going to trade through. It's going to come back down and tap in and go up. That's your bullish breaker. Okay. And your bearish, okay. So your bearish break is going to be just the opposite. Down, down, boom, boom, boom. All right. And what's going to happen? You're going to have your order block. All right. Before breaker structure, BOS. All right. You're going to get your chalk. Change the character right there. Okay. And same thing. You're going to expect price to come down and trade into that order block, but it's going to break through. It's going to violate it. Form your change of character. All right. Come back up, trade into it, take your order down. Another thing is you want to see imbalance where you want to see imbalance somewhere in your block, whether it's a breaker or a mitigation. You want to see imbalance somewhere in there. When you see imbalance in there, that just makes it the chances of it coming back even greater. All right. So that was your bullish and bearish breaker. Let's look at, I'm gonna draw it one more time. And y'all can pause and take a screenshot. I might be moving a little too quick for you guys, but just pause it. Go back, pause it, take a screenshot. All right. Draw it out in your tablet if you want to, in your notebook. All right. And we have mitigation. Right? Mitigation block. Right. So once again, we have bullish and bearish. Okay, so you're bullish. All right. So once again, it's gonna come down. Boom, 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 boom. Something like this. Okay. And notice breaker structure. Okay. Here, you're not going to get a change of character until right here. All right. It's going to come up. This block, this order block here, most likely you're going to have one there and it's going to be respected. All right. going to be respected. All right. Then you're going to come down. Okay. And most likely this order block is going to be respected as well. All right. Now, not necessarily, but it's possible. But the key is you don't want this to come back and break this. Okay. You don't want this to come down and break this. Okay. Once that happens, okay, and it comes down here, your mitigation block is here. All right. The mitigation block is there. All right. And they're gonna come down. It pretty much turns into a mitigation breaker from that point because it's gonna come down, boom, and then go up. Let me erase this portion. Oh no, didn't want to do that. All right, I'll just leave it there. But you want to come back down, trade into it, all right, and then go up, and then bearish mitigation. Gonna whoop, 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 whoop. Okay, and you're gonna have your breaker structure, your BOS. All right, no change of character. All right, because it's not going to come all the way. It's not going to break. All right, it may test an order block or maybe it'll feel an imbalance up in here somewhere. Okay, but then it's going to go up. You're going to get your SMS right here, shift in market structure. All right, most likely at a block, order block or something right up in there. All right, once it does that, your boom, that's your mitigation block right there. All right, then you're going to look for it to come back down. All right, break, come through, trade up into it, take your trade right there. All right, right here, you take your trade there. On this one, you take your trade here. Boom, easy peasy, lemon squeeze. All right, I just wanted to share that with you guys. If you guys have any questions, comments, or concerns, just leave a comment below. If you find this video helpful, please give me a thumbs up. And don't forget to subscribe to Black Diamond FX. And if you need a mentor, I'm that guy. I am that dude. All right. So y'all have a great day, and I will talk to you guys later. Deuces.